Hey guys, how are you? This is Ishai Breslauer, your host of the CRE SharkEye Show. Hope you guys are doing fantastic today. And I'm really excited today. I tell you why, because I have the youngest bunch I've ever had on the show. And the reason for it, you're going to hear in a second, it's because these guys do real estate. They do real estate. They do commercial real estate. And they are, they got into it and they do it on a in a full blast. And the company name is Donis Investment Group. Did I say it correctly? Donis Investment Group. Awesome, awesome. And we have with us Jeffrey, Kerwin, and Kenneth, all brothers. Donis, again, Jeffrey, Kerwin, and Kenneth Donis. And it's a pleasure and honor to have you guys on the show.
Yeah, no, it's awesome to be here. We appreciate you having us all on. I don't know if you've ever had three guests at once, but we'll try to make this a good show.
Oh, yeah. I never had three guys. I never had two guys at once. It's actually very exciting. It's like double excitement, young and multiple. Tell me something. You know what? Before we even start getting into your story, which I can't wait to get into, if you guys can give us like the elevator pitch of what is your business? What do you guys do?
Yeah, just pretty much sum it up. We invest in apartments and we help passive investors invest alongside us. And we pretty much target states in the Southeast here in the United States. And we're targeting 80 to 200 units, BC class assets that have value add potential.
Beautiful. You made it short, sweet, and very, very clear. And we're going to get into it, like in details. But before we do that, how the heck you guys got into real estate at your age? How old are you, by the way? First of all, let's start with that. How old are you?
Yeah.
Who's the oldest?
Well, my name is Kenneth. We really appreciate you having us on. I'm 23 years old, so I'm the older brother.
I'm Jeffrey Donis. I'm 19 years old.
And I'm Kerwin Donis. I'm Jeffrey's twin. I'm also 19.
Amazing. So you guys both are twins, Kerwin and Jeffrey.
Yeah.
Yep. And Kenneth is the older guy. And you guys wanted to go into real estate, and at that young age. And I'll tell you why I'm so curious, and I want to hear the whole story, because at that age, most people don't get into business. That's the first thing, okay? They're busy with other things, and you tell me if you go to college, not, so on and so forth. I'm going to hear the whole story. We're curious about that. But beyond it, most people think if they get into real estate, it's usually single-family homes. Everybody talks single-family homes, flipping and all that stuff. And I always try to educate the people who are mostly your age and older, and to tell them that anyone can do this at any age, no matter if it's investing career or a real career, or you could start with, just working for a firm and just grow from it, et cetera, all kind of things like that. But most people start on their own when they go to single family homes. So tell me how you guys started up, how you guys made that decision. How did it work? Tell me.
Yeah, so we first got started in real estate. I was sitting in my apartment at college, and I was watching The Breakfast Club, and a guy named Mark Whitten came on and started speaking about wholesaling real estate and how he pretty much built a real estate business and company, and made a multi-millions of dollars, all with no cash, no credit, and no experience. And I was like, well, how is that possible? I'm here studying to be a physician assistant, trying to get $100,000, salary. And this guy came from nothing and, made multi-millions of dollars. So that's kind of how we learned about real estate. We always thought you had to kind of have money to invest. So that's kind of what caught our attention. And that's kind of what we went after.
It's amazing. Yeah. But, before I go, and I want to hear you, Jeffrey, and, it's weird. I mean, it's great and it's weird at the same time, because when you hear a lecture from one guy, it opens your head, it opens your heart, and then you hear 5 other lectures, and then you read 6 other books, and only then you get into that position where you say, okay, let's do this. How come only one? What's the deal?
Yeah, well, this is Kerwin, and we actually read Rich Dad Poor Dad the summer before my freshman year of college. And that's when I first listened to it. And I always like to say it's what broke me. Before that, I always thought 9-to-5 job, go to law school. That's the best path to success. I'd never been introduced to the entrepreneurial journey or even real estate investing as an option. And so once we learned and read that book, I think that was what kind of sparked that seed in us all.
Incredible. Jeffrey, you were starting to say before something. I stopped
Oh,
there.
yeah, yeah.
Go ahead.
No worries. So, as soon as we got into wholesaling, it took us about. I was a freshman in college at the time. I went to a local state school here in North Carolina, which is where we were raised, and I still live today. Um, but I was coming back from Guatemala, which is where my mom is from. So we have a single mother, and really that's why we got into it. We want to retire her as soon as possible. But it was 6 months into college. We had just gotten back from Guatemala for the first time. Our family comes from a very, very impoverished background there. They live in a small village where there's not much clean water. They're wearing our T-shirts that we outgrew
Wow.
years ago. Yeah, it's very, very like humbling. It was a humbling experience, but Kerwin likes to refer to it as like our personal mecca, where we really just realized how close we were to that being that poor. And of course, we didn't come from a high income background. It was very low income, but completely different being in the United States versus being in a third world country. We realized the opportunities that we had here, the resources, and what we were taking for granted. So as soon as we got back, Kenneth was already listening to podcasts while we were there. Kerwin and me were reading a lot of books while we were there. We got back, and then that's when the entrepreneurship journey started. Kenneth mentioned we got into wholesaling. Eventually, we got our first deal 6 months in. I ended up dropping out of college because I finished my first year. I made my first amount of money in real estate that summer before going back. So it was the most money I'd ever seen. Held in my hand, it was one check, and I was like, I'm not going back after this. So I just decided to drop out, and we started scaling the wholesaling business. Got into creative financing, where we were able to get 2 rentals, and then we did a fix and flip over about 13. So we did like over 16 wholesale deals, 2 creative finance deals, 1 fix and flip over 13 months. And it was then when we decided that, multifamily is something we always wanted to get into. And it was just for all the benefits, right? Economies of scale, just the sophistication of the people that you work with. We really enjoyed it. So we just decided to jump right in.
So, you know what? Let's back up for a second. It's a beautiful story. I love it. Let's back up for a second. The first deal. How did you get into the first deal? What was it exactly? Again.
Yeah.
For wholesaling, we were, cold calling for 6 months until we got our first deal. Some lady, we had given her an offer. It didn't work for her at first. It was a vacant house. And then she called us back and said, hey, the offer that you gave me, I'm pretty much ready to go. I think I just want to sell it. So we just got it under contract. We set up, sent it out to our buyers, and we eventually had like 13 appointments for our buyers to come out and see it. And we had people offering us, over what we had gotten under contract for, of course, like 10, 15 over without even seeing the house. So we were like, okay, this is a good deal because people want it without even taking a look. Like they know it's just a good price. So we decided to wait, and we said best and highest offer by a certain time. And we had someone offer us, we got it under contract at 60. We had someone offer 93,000 and like some change. And that's kind of who we went with. And eventually we had someone offer more, but we kind of stuck to our word.
When was that? When was that happening?
This was
Durham,
North Carolina, which is where we grew up and where we live now.
Yeah.
When? This was in March.
Well, we got it under contract in July, towards the end of July. It closed May 11th.
Cool. I love it. And that was, okay, so that was it. And that gave you, I guess, confidence, and you found the way to do it without money through wholesaling. And you did that. You used that trick to do that. Where was and how came up the aha moment to actually get into multifamily?
Yeah.
Maybe
I would say,
yeah.
There was multiple times. We always listen to podcasts, but I do remember I was listening to a podcast and a guy came on to this really big wholesaler. His name's Rafael Vargas. Another guy, one of his mentors, came on and said that he didn't say necessarily syndication, but he said that he was in multifamily and he had done over like $500 million in assets under management in the span of like 3 or 4 years, which I didn't even know it was possible. I didn't know what he was doing exactly. But then we kind of got introduced to a mentorship group where this guy named Alvin Hope Johnson came on and actually started speaking about syndication. And that's where it kind of clicked, like, oh, you can do that as well with almost no money.
Yeah.
So that kind of caught our attention.
Yeah, and we were on that mentorship call. It was just like a mastermind group, and Alvin Hope Johnson, he came on to the show, and we just saw that was what we wanted. We're chasing passive income. That's why we're in real estate. And single family is very transactional, whereas multifamily is it's more long-term wealth, and it's a slower burn, but it'll help us achieve our goal. And we just asked a friend. We were like, well, what should we do? We want to do multifamily, but we feel like we don't have the experience or the knowledge. And he just said, take the straight path to where you want to go. And we knew that multifamily was always going to be the end goal anyway. So we just decided to, to just disregard any of the obstacles or limiting beliefs that might have been the reasons we wouldn't do it. And we just took action into multifamily.
Beautiful. Tell me something. So you're now on that track to get into multifamily, right? You're there. Do you have like already a deal? Like I'm assuming you didn't get into yet, but you're like looking at them, right?
Yes. So starting out, the first thing we did was educate ourselves, which was reading the Investor Real Estate Syndication book by Joe Fairless. We treated that like a textbook. And then fast forward to today, we're under contract with the team on an apartment complex in Jacksonville, Florida. It's going to be the first deal that we do, 138 units. But we're quickly looking to get a second. So Kenneth is an underwriter for our team, acquisitions. He looks at deals all day. We have some going on in Alabama that we're hoping will be our first acquisition in regards to what we find ourselves. Our partner found the one in Jacksonville, and he hopefully has one coming up. So we're just trying to scale on that end, but we're still, I still do some other things in single family. So we're trying to just build our portfolio pretty much is our goal.
Beautiful. Tell me something. How do you divide? So Kenneth is doing the underwriting, and Jeffrey, what do you do?
Yeah, I focus on investor relations. So I raise capital, and I also, I call it strategic partnering, pretty much just networking intentionally. So I'll meet someone at an event, which we try to go to as many events as possible.
We'll get to that.
Yeah.
I want to get into that in depth, but Kerwin, you what?
Yeah. I'm in charge of the marketing, so I work on our podcast. We're hoping to make it a daily show, and I'm also social media.
Beautiful. I love the division. I love the energies that are spread between three brothers. It's great. It's great. And I hope you'll have the strength and the success to continue like this. And hopefully we'll meet, in many, many years and you do it. But, let's go back. Jeffrey, you started talking about the raising of the capital, right? Raising capital is not an easy task. Meaning I'm going to get into all three of those aspects, into the podcasting and that stuff. We're going to get into that. Kenneth, and we're going to talk about underwriting, and we're going to talk about how you get deals and all that stuff. But I want to start with you, Jeffrey, because I think that this is, at that age, it's such a challenge for even a person who is my age, which is close to 50, to raise capital. You need track record. You need to know people. You need to network. You need people to trust you, to get to people to understand that you're doing the right thing, to show them that you have the ability to get the right deals, and for them to be able to trust you and follow you. So, Jeffrey, tell me about it. Tell me about the challenges. Yeah. Tell me about the upsides, the side, let's put it that way, the side where you manage to click, and also what are the challenges on the go?
Yeah. So I would say what we did well was build a good team around us. So we joined a group out of Dallas, Texas called Think Multifamily. That's where the track record comes in. Mark Kenny leads that group, and he's pretty much on our team on any deal we'll go into. So that's where the track record. Obviously, we're young, but he's got the experience, he's got the doors and all that.
So he's the general partner?
He's on the general partnership team. Yeah.
Okay. Go ahead.
Obviously, when you have these conversations with investors, you have to be able to speak the language. Like, it doesn't just come with not knowing how to talk, right? Or not knowing what you're talking about. So I obviously put a lot of time into mastering my craft, which is multifamily. I understand the underwriting. Kenneth focuses on it. I still understand it. I am treating it as if I am the professional. So you have to act that way when you're talking to these people. A lot of people don't even ask me how old I am because I don't meet them always in person. It's over the phone a lot of the times. But they'd never question my credibility because I'm able to actually talk about things. And the way you frame the situation, I am the expert because this is the thing that I do all day. This is what I do. This is the business that I'm running. So by actually putting in the time to educating yourself, you're able to, they don't even ask you how old you are. So that's like a lot of people ask me that, well, you're only 19. How can you raise money? But it's because I study a lot and I put a lot of time into it,
Where's the main crowd for you guys, Jeffrey? Still with you.
Yeah. So in regards to our audience, in regards to like who,
Yeah.
so yeah, I mean, anyone that's looking to receive a return on their investment, whether that's, highly paid professional or just someone who is looking to get some type of tax write-off, depreciation benefits, something that you're able to collect if you invest in our deals, if when you come down to your CPA and you're able to qualify for them. But there's a lot of different benefits, and anyone that's really looking to hone in on that, Kerwin can also touch on who our audience is since he focuses on the content.
I'm going to get to that because I have a lot to talk about the underwriting in a second, but I want to finish with you first. And I'm very methodical, you'll learn. And the question is, when you talk to guys that are accredited investors, a person who has done countless of investments, doesn't matter what, and he sees a 19-year-old kid and his brother who is 23 and another brother who is 19, and he's saying to himself, why in the world should I give these guys money when I have other people who are 30, 50, 60, and 70 who are doing it for years and years with track record that are impeccable? Why shouldn't I give them my $250,000? Why should I give these guys? How do you handle it?
Yeah. The group that I'm in, I leverage their credibility a lot. And it obviously, when I'm in communication with these investors via email, very professional. All the emails we send look the same. I would say we have a brand behind us. So a lot of the colors we have, gold and black, that's the thing that comes off as a real company. So it's not like I'm treating this like a part-time or a hustle. This is something that comes off very professionally. And also I would have to, credit our Think Multifamily group for a lot of that too, because we just are really partnering with them. So it's not just myself. Yes, you're investing with me, but I have a team behind me as well. And obviously I'm young, but a lot of people on my team, they have 10 times the experience that I do. So that you're investing with the team as well as us.
I love the answer. And everybody who's listening, I have courses, by the way, guys. I don't know if you know, but you don't need them, but you can tell friends who need, a beginner course for commercial real estate, obviously. And I'm telling you guys, the listeners, look at this. Look at how great the answer is. I love the answer. When you're young and you don't have the track record and you get attached to the right people, to the right team, to the right leaders, and you syndicate, and you come to a person and you have that, problem with confidence to say, hey, this is a great investment. The first time, the second time, maybe even the third time, you have those partners to rely on. You tell them, hey, these are my partners, and they are reliable, and they have the track record, and here it is. Because by the third and fourth time, you're going to have your own track record. But that's how you start, guys. And I love that. Kerwin, let's move to you a little bit. Not Kerwin. One second, I'm getting confused here. Kenneth, sorry. Kerwin, I'm going to get to you later. We'll talk about the whole social media thing. That's very exciting. I love that. But, Kenneth, let's get into how do you find deals?
Yeah, well, of course,
you're on the syndicate, meaning to make it clear, meaning to everybody who's listening, you guys are still on the LP side, on the limited partnerships, as you guys indicated, right? Am I correct?
Or general partner.
Yeah, we're on GP.
GP, yeah, general partners.
You're general partners, but you have a general partner who is meaning. How does it? You know what? I'm going to leave it to you. How does it work, Kenneth?
Yeah. So, for the deal that we did, we had one of our partners. He's like the lead sponsor. We're just one of the co-sponsors. So we are a part of the GP team on this one. I do all the acquisitions. So what I do primarily is speaking to brokers, just building relationships with the brokers. As you would know, that is very important in this business. And then underwriting the deals that are sent to me in the markets that we're looking at, always studying the markets, just kind of checking in and seeing what is trading and what things are trading at, just to kind of stay up to date. So pretty much what I do is look for deals, find deals, and try to underwrite them. And that's pretty much my role.
So wait, I'm going to tell you. Wait, don't run away. Listen.
No, not right.
This is because there's a lot into what you do. A lot. You do a lot. Listen to this. First of all, you're not on the side of the LP. Usually people who get in first, they're syndicators, and that's that. You're a lot more than that. You just revealed and just taught us a beautiful lesson. You just told us that you're not only syndicating, you're actually doing the sourcing of the deals. You're finding the deals, which we'll want to hear all about how you do that and all that stuff. And you're finding the deals. Obviously, the person who was the main sponsor, he let's say he rides the horse, he drives the bus, call it whatever you want, but you're not riding the bus. You're literally helping out in a much, much more serious way because you're finding the deals. And that's a big, big, big deal. So the first question to you, Kenneth, is tell me a little bit about your methods in terms of finding the right markets, finding the right brokers, finding the right deals, the types of deals that you're finding. You know what I'm asking?
Yeah. Well, so starting out with the markets, I mean, we want to see markets. We don't necessarily mind if it's like a secondary or tertiary market. We're finding those to also start to become very competitive. So cap rates are kind of compressing in those as well. But we kind of study those markets as long as they have population growth, job growth, and it's just a growing market. That's the markets that we want to be in. We're in North Carolina, South Carolina, Georgia, Florida, and Alabama. So those are the markets that we're currently looking at, and, you know, pretty much just calling the brokers. We have instant credibility just because a lot of the brokers have kind of already worked with our group. So it's pretty easy for me to just call them and say, hey, you know, I'm a part of the Think Multifamily group. I'm looking for deals. This is kind of what we're looking for, which is 100 to 200 or 80 to 200 units, depending on if our group owns assets in the area. You know, B2C class, value add potential, something with light to medium renovations, not really looking to do any heavy lifts or any repositioning of any assets. Typically probably built before 1995. So that's kind of what we're looking for.
So you're going after BNC classes, right? BNC
Yeah.
class multifamily complexes. You're working with a very strong sponsor who has a very big presence. So that gives you the ability to call brokers and actually help you out. And then that puts you in the position where you can go and then Jeffrey can run around and syndicate and, run after the people, et cetera, after you get that done. But you know what, Kenneth, what can I ask you, if that's okay, what did you study in college?
Yeah, so I was actually a kinesiology major. So I wanted to be a physician assistant because I always kind of felt a calling to try to help people in life. But then I realized, that it wasn't, once I found entrepreneurship and real estate, I feel like I can definitely help a lot more people, by actually making a lot more revenue and being able to give a lot more away. So that's what I studied though.
Beautiful. Beautiful. And tell me something, how did you teach yourself, or how did you learn, or where did you learn underwriting? It's not a simple thing to learn.
Yeah, and it's an always, I'm always trying to perfect my craft, but really, we had taken a few courses at first. I think it was like Jonathan Twombly's course, which kind of showed you, a lot of it is plug and chug, but then you have to kind of know what means what. So just over time, looking at different like OMs and kind of what their average, price per door on certain things, certain expenses are. And then also speaking with property management companies in certain areas to get their insight, because they're going to be the ones managing it.
Right.
But it really comes over time and just underwriting a lot of deals.
Beautiful. I love that. Kenneth, you're a master. It's beautiful. It's especially at this point, in your life, to go and find deals and underwrite it and have that confidence. And I think that what's winning here, and I can already tell, it's the team. Because only finding deals is not good enough. Makes you it makes you like a broker or something, which is also great. A lot of people make a lot of money from brokership, but you want it to be on the side of doing the acquisitions. And then comes and you say, okay, I don't want just to bring deals. I want to actually be a part of the deal. So you go and syndicate it. But then comes Kerwin, I'm with you now. You got to make the noise. You got to make the noise to get the people to come. So how'd you get to that? Tell me something. And what type of noise you're making? How'd you come to this idea of making a podcast?
Yeah. Well, we always listen to podcasts at first. And after reading Joe Fairless's book on syndication, he mentioned the importance of having a thought leadership platform and kind of establishing yourself as a credible presence. So some of the benefits of having a podcast, as I'm sure you've experienced, are the networking. You get to connect with a lot of people in the industry. I'm always learning because I'm always on podcasts listening to people who know more than I do. Also, just having that presence, so I'm able to provide content and value. And I think that if we're putting out this good content, more people will come our way. But where we have that go-giver mentality of just giving, and then, that we believe that good things will come to us. And also that's what I just really love, storytelling. And that's what we're hoping to do through our podcast. So it's a personal passion of mine, and I'm able to express that through the medium of podcasting.
That's beautiful. But how do you get to great guests?
Yeah. Well, I honestly just DM them. I listen to other podcasts they've been on. Typically at the end, they'll kind of mention some kind of call to action or a way that the audience can reach out. And I'll go there, find their contact information, DM them, let them know of the other credible guests we've had on our podcast, to just let them know that this is a credible podcast and I'm serious about it. And a lot of times it's shoot and miss, but for the majority of them, they will be open to being on the show, maybe after multiple contacts or attempts.
Beautiful. I love that. And through what medium you do that? LinkedIn, Facebook, Instagram, all of them.
So for the podcast, that's on Apple Podcasts and Spotify. It's the Real Estate Monopoly, but we're also present on social media. I think my vision for it is...
I'm asking in terms of finding the guests, meaning we're going to get to the social media aspect in a second.
Mm-hmm. Yeah, LinkedIn is a really good one.
The primary, right? It's the best.
Yeah.
I find it the best also.
Absolutely. But a lot of times I'm not connected with people yet, so I have to email them or go through their website on their portal, the portal on their website. So it really just depends on the person. Ideally, LinkedIn.
Right. And you have to find them in good, good timing. That's the key. Good timing. If someone's in the middle of an acquisition, and Kenneth can tell you that also, meaning you can't talk to them. Real estate, one of the things I'll tell you about real estate, and you guys know it already, or you're experiencing it right now. It's people think, you have a lot of types of jobs, a lot of types of, I would say, fields, right? Where you work around the clock. I'm not talking about 9-to-5 jobs. I'm talking about if you're either an entrepreneur or solopreneur, or you are, you work for someone, but you have that kind of job that make you a part of that, company and entrepreneurial, I would call it, role that you have there. Then it's now 9-to-5. You work around the clock. So you have those who work all the time, like traders, like boom, they work all the time. They don't sleep, etc. In real estate, it's like more mellow. Agree with me. It's mellow. You don't have busy all the time. But when it comes to close a deal, it could be 2 weeks of no sleep. It's like 2 weeks where you don't eat, you don't sleep. It's everything about the closing the deal and then raising the capital. It's like it's all around it. You don't breathe, you don't sleep. And then when it happens, you have a little bit, again, more of relaxing time. So I love that. So that's why it's hard to get to people who do real estate. If you caught them in the middle of that, forget it. You're not going to get them. But those are the people who you want. So, Kerwin, just one more aspect, one more thing. You start talking about social media. Can you tell us a little bit about what are your efforts, where you find the people, how do you work with that? You took someone to do it. You're doing it yourself.
Oh, no, yeah, we do it all ourselves right now. Ideally, the goal is to outsource it, but it's really hard to do that and also keep that personal level. But the vision for the social media presence is just to share our story and document our journey. A lot of other influencers in the real estate space will start documenting their journey once they already have the nice cars and the nice houses and all the assets. But we honestly started documenting our journey from when we first started. And we like to say it'll be like the receipts for when we are eventually successful and have acquired, and achieved our goals. And just later on in our journey, we can show people that, they can do it too, because we started with nothing.
That's beautiful. I love that aspect. Which platform you like the most, Kerwin?
So I would say the podcast, but in terms of social media platform, I liked Instagram and LinkedIn. I think, especially for the people trying to target.
All right, beautiful. I love the energies here. You guys are awesome, really. Tell me something. You guys have an office that you have. You're in North Carolina, am I correct?
Yeah, we work from home.
You work from home. Tell me something. Oh, you work from home, and you guys, all of you together in the same place, or you live in different places and then you meet? How does it work? The dynamics.
Yeah, we live at home together, all three of us. It's like our personal mastermind, 24/7.
Yeah.
Amazing. And your mother is there, obviously, right?
Yeah.
How does she handle all that? You have an area where you work, or it's like she's moving around with a spaghetti and whatever, and you're like in the middle of stuff. Mom, we're just leave us alone right now. How does it work?
Yeah, she's like really good at it. I mean, the reason we got into this really was because we wanted to retire her as soon as possible, but she's still working a lot of the time. So honestly, she's not always here. Typically, she's not here throughout the week. On the weekend, she's here more often. But our goal is to retire her, and then we can, go and achieve the other goals. But that's really the first thing we have is to replace her income with passive income and also active income, just to make sure that she doesn't have to work, and that way she can, because she's getting older, right? So we just want to make sure that she's healthy and she can enjoy life because she's done so much for us.
Tell me something. This question is mostly for Kerwin and Jeffrey because Kenneth, you're already an old man. You're 23. So people your age are post-college, are going to work now. Life is starting for you, right? But you both young guys, what are your friends saying about this whole thing? Meaning probably your friends are busy just, doing nothing, having fun or doing college or other important things. I'm not saying not, but what are people saying about you guys running around doing your thing?
Yeah, most people have been pretty supportive. I still have friends in college. I recently dropped out as well, so we're all in real estate full time. But yeah, most of them they respect what I'm doing, and I think they understand that it's not a path for everyone and it's hard, but they all mostly respect it.
Yeah, and we have friends too. So we kind of started we didn't start the movement, but after we dropped out, a lot of my close friends started dropping out and doing real estate as well. So my closest friends are all actually pretty much on a similar path as us in regards to real estate and entrepreneurship. But we were very selective with who we hang out with. So we don't necessarily have as many friends as we used to. That's just the way that we've noticed. A lot of people don't have the same goals. They're not interested in the same things anymore. And we just necessarily want to protect our energy and make sure that we're in the right rooms. So that's why we go to a lot of events. We love going to events, hanging out with people that are talking about like what's going on in the economy, real estate, how you can build wealth and all that. And unfortunately, a lot of people our age aren't thinking about that, which is understandable. But we come from a different background, and we have that. That's the thing that we want to focus on right now.
Tell me something. When you go to those events and you meet all these people, you obviously meet people that are older than you, and they have a conversation that is mutual, like just like we're talking now. But you probably hear it a lot. And what do you hear from them? They say to you how old you are, etc. They probably are very happy to hear that, right? That you guys are, are so enthused about this whole thing called commercial real estate.
Yeah, I would say so. Personally, and I think my brothers can agree to this, we really like hanging out with older people because they kind of have the same mindset we do. Because people our age don't, and not to bash on anyone, but they don't really have that kind of mindset. Most people at least. But I would say, really when I'm having a conversation in my mind, I completely forget about my age because I'm actually having a very good or deep conversation about either real estate or about life, about mindset, knowledge, just on this, like almost on the same level as these older people that have been very successful. So in my view, I completely forget how old I am. Sometimes I feel a lot older than I actually am. In their view, there is occasionally someone who asks, how old are you? And they're like really shocked and impressed, I guess I would say at the same time, because we're able to have, very deep conversations. I think going up with confidence, knowing about what you're talking about, even if you don't, still having the confidence of just going in there and trying to learn, because that's what we try to do.
Yeah. And I think I don't know if this answers your question, but I'll kind of just like give you the gist of our experience. So like going into these rooms, really I've realized that like it can be random events because we don't always go to just real estate. Sometimes it's just like investing, so it's very, very generic. It'll touch on real estate because a lot of the people are invested in real estate.
Right.
But being able to ask really good questions, having that energy, I just obviously being a lot younger than everyone else there, we have this enthusiasm of, wow, like what can we build in the next 20 years? A lot of people have families and they've settled down. They're starting to like just kind of preserve their wealth. We're looking to build our wealth, which is a lot of people as well. But they can feel that energy. They can have that. And they always are like, wow, you guys are doing it at such a young age. And it feels good. But at the same time, a lot of people don't even ask me how old I am. They can just tell I'm young because of how I look. So it's never like a bad thing. And most of the time, it's every single time we've been to an event, it's always been like amazing just because of how welcoming people in this space are. A lot of people have a bad stigma on like people that are wealthy. And we've had nothing but the opposite from almost everyone we've ever talked to at these events. It's just like amazing. They're willing to help you. They're looking to pour into people that are young. And that's really why we're trying to kind of inspire people through social media, like Kerwin said, because it's such an attractive thing to us to get into these rooms and have these quality conversations that people are not having in schools. Like in school, you talk about complete opposite things. And a lot of the times, unfortunately, when I was there, in my own personal experience, it was not always the most beneficial conversations, So you just don't have access to those things if you're not in those rooms or watching that video. And I think it starts with the entrepreneurship mindset in regards to the growth mindset and stuff like that.
Beautiful. Really, I love that. But let us not forget, we're still in it. It's called something called COVID out there. How did that affect your presence in events? Do you have events right now? And when were those events taking place?
Yeah. So of course, COVID has had like an impact on it for sure. There's not as many in the area, and that's kind of why we are forced to go out. We obviously all got our vaccines, but you're forced to kind of fly out, and we're going to New Orleans in October. Hopefully that's still on, but of course there's a risk. But I mean, at our age, we're just trying our best to stay safe. At the same time, we want to make sure that we're continuing to build our network. And if the events there,
what's in New Orleans, by the way? Like what?
Yeah, it's the real estate guys are having a real estate investment summit.
Oh, the real estate guys, the podcast people. Yeah.
Yeah.
Okay,
Yeah,
awesome.
it's an awesome event. There's a lot of awesome people that are going to be there. So we're really, really excited about that. But a lot of events are still going on. You just have to really look for them. I would say a lot of them aren't going on, but they're still there. So you just got to look.
Beautiful. I love that. You guys have so many dynamics, and this team is an incredible team. I see how you guys divided, the roles in such a beautiful way. Really, it's very impressive. And my question is, maybe Kenneth will answer that, I guess. What was your role model? I wouldn't call it role model. What was your model to take, after and say, that's what we have to do? Meaning, of course, you got excited about multifamily, but in terms of the business, the way you guys, put it together, Kenneth.
Yeah, well, I mean, starting off with wholesaling, there's a lot of people that we kind of looked up to. But once we kind of got into the multifamily space, we have a mentor. He's been amazing, just seeing what he's been able to do in his life. There's a lot of bigger people, that just are in the multifamily syndication space, like Brian Burke and like people that have, or Grant Cardone, people that have like built a really big, I guess, empire, you can call it, through real estate. And we know that with attention, money comes from it. So that's kind of why we're trying to just expand on all of our platforms, just get our name out there, because if people know you, well, if they don't know you, then they're not going to invest with you. You're not going to find deals. But if they know you, that there's a good chance that, someone will invest with you and vice versa.
Yeah. And if you don't mind, I can touch on it as well briefly. So in regards to role models, we obviously looked up to our mother growing up since she was a single mom. But I also, with the lack of a father figure, I looked up to Kenneth a lot. But once we got into entrepreneurship, there was these books. Like we listened to podcasts and they'd mention one book, and then I'd read this book, and then I'm like, I want another one. So then I keep listening to more podcasts. Then you hear about another book, and then you like the author, so you read all of his books, and you're just constantly on YouTube. We're constantly learning all the time. So, in my opinion, the people I look up to are the people that I receive their content and their advice from. And there's people like Robert Kiyosaki, Dale Carnegie, Grant Cardone, our mentor Mark Kenny. Napoleon Hill is really, really impactful. We love his books. So all these things.
Who was the last one you said?
Yeah, Napoleon Hill.
Napoleon, of course. Yeah.
Yeah. So just so many different people that you can take their advice from the books they read, and it's crazy the amount of change that it's had in all of our lives. Just lifelong learners is something that we're really big on.
I think it's just impressive and so mind-boggling that you guys at that age already became influenced by those things. And it just shows that where your energy flows, because a lot of people, their energy just doesn't flow that way, and they're not interested in those things. Meaning, we get excited about those things, and they just don't. Kerwin, I want to get back to you for a second before we're done. People probably approach you on social media, young people, and they probably say, dude, like, what are you doing on the social media platform when you put up all that stuff. How is that? Because that's not like a real conversation. Social media is just people throw things at you and then you have to react. So what do you do when that happens?
Yeah, so most people, in terms of like their outreach, they're usually positive or just asking questions, and I try to give them actionable tips, like books to read, resources, because we're not producing the content all the time enough to like actually help them on their journey. But I try to give them some kind of takeaway where they can go and implement it. But also, there's a lot of people that just want to talk to me and not really take action. And so I give them enough, and then I kind of use my own judgment to determine that I have given them enough, and to kind of let them go and try it on their own.
I love that. Before we apart, as we call it, what is the tip you're going to give to young people who are listening to me or to anyone? What should they do? What is the main thing that you would tell them to go after in order to be like you, to follow your footsteps?
Yeah, I mean, and we're not like, we're not any crazy thing. I think anyone can do what anyone else is doing. So if anyone else has done it, it's possible. That's our philosophy. But I would say the first thing would be being very careful with who you hang out with and what information you're allowing into your brain. We don't really watch TV or the news or anything like that. And once we cut that off, that time that we were putting towards that, and then we're now very intentional with educating ourselves on certain topics, whether that's personal development, like Napoleon Hill books, or financial education with Robert Kiyosaki, or just multifamily with our mentor and the courses he's putting out, listening to podcasts and stuff like that. And you can, if you don't have that many friends that are trying to do what you want to do, then that's okay. You can get lonely, but you can still find value in other forms of entertainment. Maybe that's what you're doing, hanging out with them because you enjoy it. Well, maybe you can read a book and hang out with Dale Carnegie for an hour rather than the friends. You know what I mean? So that's kind of what I would say is be very, very selective with who you let into your circle. The metaphor I always drop is, or I like to say is, it's like swimming in a pool without trying to get wet. So whoever you hang out with, their habits will rub off on you one way or another. You might as well make them really good habits that you would love to have. So that's why, if you want to be a real estate entrepreneur, then you should probably look for real estate entrepreneurs, whether that's virtually because of COVID or in-person events or, local meetups, whatever you can do to get around those people. It first starts with being intentional about it. So whether that's, you can follow people on social media nowadays. So there's no excuse.
Love that. Any one of you want to add? Yeah.
Yeah, I would say two things. Number one is believing in yourself. Now that might not, it's easier said than done. But once you start reading these books, a lot of them kind of talk about that mindset and truly, truly believing in yourself and knowing that anything you put your mind to, set goals for, and then work towards very hard is possible. Literally anything. It doesn't matter what you want to be. If you want to be an astronaut, a doctor, a scientist, whatever, a real estate tycoon, anything is possible. So just one, believing in yourself, knowing that you can do it. And then two, persistence. We have learned time and time again that the universe or God or whatever you want to call it will test you before giving you a gift. So if you give up early, 3 feet from gold, you're not going to be successful. The only way
Love that story.
you can fail is if you quit. So if you never quit, you will eventually, no matter how long it takes you, 2 weeks, 3 weeks, 3 years, 10 years, 30 years, whatever, you will achieve whatever you set out to achieve. So as long as you never quit, anything is possible. So I think
I love the message.
Yeah.
Kerwin, you want to add something before we?
Yeah, kind of like sum it all up. But there's a quote, and I'm going to butcher it, but it pretty much says, as a person, you don't change through life. The only thing that changes are the people you meet and the books you read. And I truly believe that's what's helped us along our journey. We've surrounded ourselves with great people who lift us up. I think any relationship you have should be symbiotic and you should bring each other value. A lot of people, you walk into a room and talk to them and they drain you, or that you feel like you're just getting pulled down. That should not be the case. Everyone should pull you up. And that's how we try to surround ourselves with people like that. Also the books, that's been what's allowed us to communicate with other more sophisticated people, have the same language, understand, and have the confidence of going into it. And I think that as you read, the more books you read, the more you level up. And so I just honestly, those are my two tips: read and meet the right people.
Love it. Beautiful. How people can find you, investors, deals. Tell us. Obviously, you guys are listening. Look at the links below, above, anywhere around. But you guys, please tell us. Go ahead.
Yeah. Our podcast is called The Real Estate Monopoly. It's on Apple Podcasts and Spotify and most other podcast streaming platforms. We're also at Donis Brothers. That's Donis Brothers on pretty much any social media platform.
I love that. You guys are inspiring. I love that thing. And I want to thank you. Thank you so much for being with me and being a part of the show. And I can't wait to be a part of your show. And this is awesome.
Thanks so much for having us.
Yeah, we really enjoyed it.
No problem. Thank you, guys. Take care. Hey, guys, I hope you really enjoyed this show tremendously. I really did. It was really cool. What I want to tell you is that I'm going for a little vacation, and we're going to meet in the beginning of October. The reason is that the Jewish holidays, I'm an Orthodox Jew, and the Jewish holidays, it's a very condensed time, and it's just impossible to do the show at that time. So for the month of September, I'm going to take off, and I'm going to see you in the next season. I'll see you guys in October.